Listen, let me ask you something for a second. Have you ever looked at your bank account and seen something like maybe $87, maybe $112, maybe just about $100, and thought to yourself, there's no way this tiny amount of money could ever change my life? Because that's what most people think. They think you need thousands of dollars to start investing. They think you need rich parents. They think you need some secret Wall Street knowledge. But here's the thing. Some of the most successful investors in the world started with almost nothing. And what most people don't realize is that the difference between someone who turns $100 into $10,000 and someone who stays stuck with $100 isn't luck. It's not intelligence either. It's understanding two things most people completely ignore: the math of money and the psychology of money. Because when you understand those two things, you start seeing opportunities that most people walk right past every single day. And this is where it gets really interesting. My name is Noble, and I spend way too much time thinking about money, investing, and how ordinary people can build real wealth without being born rich. If you're someone who feels like you're always working hard but your money never seems to grow, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Because today, we're going to talk about something most financial advice completely ignores: how to realistically turn $100 into $10,000. Now, before we go any further, I want to challenge something people believe about money. Most people think wealth is built with big amounts of money. But historically, that's actually not true. A study from Fidelity Investments found that over 80% of millionaires are self-made, meaning they didn't inherit their wealth. They built it. And many of them started with extremely small amounts of money. But here's what most people don't realize. The amount of money you start with matters far less than the system you use to grow it. Look, imagine two people. Person number one has $10,000, but spends it on random things: gadgets, clothes, things that lose value. Person number two has $100, but they use it to start something that generates more money. 5 years later, the second person could easily be ahead. Because wealth isn't built by the size of your first dollar. It's built by what that dollar does after you earn it. And this is where psychology starts to matter. Because the biggest reason most people never grow their money isn't a lack of opportunity. It's something much simpler. They underestimate small numbers. Look, $100 feels small, so people treat it like it's disposable. They spend it on food delivery, random online shopping, maybe a night out, and the money disappears. But if you treat that same $100 like a seed, suddenly the conversation changes. Because money works a lot like planting a tree. You plant a seed today, you nurture it, you protect it, and eventually it grows into something much bigger. But if you keep digging up the seed every few days, it never grows. And that's exactly what people do with money. They never let it grow. Now you might be thinking, okay, Noble, this sounds nice, but turning $100 into $10,000 sounds impossible. And honestly, if you try to do it in one step, it probably is. But here's what most people don't realize. You don't go from $100 to $10,000 in one move. You go from 100 to 300, 300 to 1,000, 1,000 to 3,000, 3,000 to 10,000. Each step builds momentum, and once momentum starts, money grows much faster. So let's actually talk about real ways people do this, because this isn't theory. People are doing this every day. The first way is something incredibly simple, and honestly, it's one of the most underrated strategies on the internet: flipping. Now, before you roll your eyes, hear me out. Flipping isn't about buying junk and hoping someone buys it. It's about understanding price differences in markets. For example, someone sells a used desk for $40 because they're moving and want it gone quickly. You buy it. You clean it, take better photos, list it online for $120. Suddenly, that $40 purchase turns into an $80 profit. Now imagine doing that 10 times. Your $100 becomes roughly $900. And this is happening constantly. Platforms like Facebook Marketplace, eBay, and OfferUp are full of people undervaluing things because they want speed, not maximum profit.
This is where it gets really interesting, because you're not creating value with money alone. You're creating value with effort and attention, which most people don't want to do. Now, the second step is where things start accelerating, because once you have about $1,000, the opportunities start expanding. And this is where people who understand money start playing a completely different game. Instead of flipping random items, they start investing in income-producing assets. For example, digital products, templates, online guides, small niche websites. Because unlike physical products, digital products have almost zero production cost after creation. You can sell the same thing hundreds or thousands of times. Now look, I know some people hear digital products and immediately think it's complicated, but it doesn't have to be. Someone who knows how to design resumes could create a $10 resume template. If that sells 100 times, that's $1,000. If it sells 1,000 times, that's $10,000. And here's the crazy part. Many creators are doing this with extremely simple products. Study guides, budget templates, workout plans. Not revolutionary ideas, just useful ones. And here's the psychological shift most people miss. The goal isn't to make money once. The goal is to create something that makes money multiple times. Because when money starts working without your constant effort, that's when wealth starts forming. Now, let's talk about something even more powerful. Compounding. Because this is where math starts doing the heavy lifting. Albert Einstein allegedly called compound interest the eighth wonder of the world, and whether or not he actually said that, the concept is still incredibly powerful. Let's look at a simple example. Imagine you invest $1,000 into something that grows at 10% per year. After 1 year, you have $1,100. But the next year, you're earning 10% on $1,100, not the original $1,000. So the growth accelerates. After 10 years, that $1,000 becomes about $2,593. After 20 years, it becomes $6,727. After 30 years, it becomes $17,449. And this is without adding another dollar. This is why time is more powerful than starting money. But here's the frustrating part. Most people never experience compounding because they interrupt it. They sell too early, they panic when markets drop, they withdraw money for short-term spending, and the cycle resets. Now you might be thinking, but Noble, I don't want to wait 30 years. And that's fair, because compounding isn't just about long-term investing, it's also about skill compounding. Every skill you learn increases your earning power. For example, learning video editing, learning sales, learning online marketing, learning copywriting. These skills can turn a $100 investment in courses or tools into thousands of dollars in income. And the crazy part? Most creators are spending hundreds of dollars on entertainment every month, but refuse to invest in skills, which is kind of like refusing to buy seeds but complaining you have no crops. Now, this brings us to something really important, the mindset shift. Because the people who eventually turn small amounts into big amounts think differently about money. They stop asking, what can I buy? And start asking, what can I build? That single shift changes everything. Because when you build something, a skill, a product, a system, it can produce income again and again, whereas spending only produces temporary pleasure. And this is where it gets really interesting. Because once you reach that $10,000 milestone, the game changes again. At that point, you can start investing into assets like index funds, small businesses, or scalable online systems. And historically, the stock market has returned around 10% annually over long periods, according to data from the S&P 500, which means your money can start compounding automatically. But none of this happens unless you take the first step. And honestly, that's where most people fail. Not because they're lazy, but because they believe small actions don't matter. They think success requires one big breakthrough moment. But real wealth usually grows quietly, small decision after small decision, month after month, year after year, until one day the results suddenly look dramatic. But the truth is, they were building all along. So if you're sitting there right now with $100 or $200, or maybe just a small amount of money, don't underestimate it. Because that $100 might not look like much today, but it could be the first domino in a chain reaction that eventually becomes $10,000, $100,000, or more. The key is starting, taking action, learning from mistakes, and letting your money and your skills grow over time. Because nobody becomes wealthy by accident. They become wealthy by design. And that design starts with one decision, the decision to stop consuming and start building. So if this video helped you see money a little differently, hit the like button, subscribe to the channel, and let me know in the comments, if you had $100 right now, what would you do with it? Because sometimes the smallest amount of money can teach you the biggest lessons. And those lessons are what eventually create real wealth.